Hey everybody, welcome to another session of Ask Me Anything with Venk Shukla. And so I'm BJ Arun, I'm president of TiE Silicon Valley. It's my privilege to welcome all of you today. Just a couple of housekeeping things. I want to remind everybody that we have our virtual TiECon series already underway. We had a fabulous event with Dr. Deepak Chopra and Vinod Khosla last month. That was June 24th. The next one's coming up on July 22nd. And we have some wonderful speakers there as well. We have keynotes from Shelly Archambault. We have another keynote by Amitabh Kant. Amitabh, for those who are not aware, is the CEO of Niti Aayog. Niti Aayog is the new name for what used to be called the Planning Commission in India. So very senior and powerful bureaucrat and visionary for the Indian government, very pro-industry. And so that's happening on July 22nd. And of course, we're going to culminate in the actual TiECon, virtual TiECon on September 2nd and 3rd. The September 2nd keynote is by none other than Indra Nooyi. And so we have a fabulous lineup of panelists, speakers. So if you haven't already registered, please do register for them and mark your calendars. At this point, I'd like to invite my good friend, Venk Shukla. Venkatesh Shukla is the founder and general partner of a seed stage fund called Monta Vista Capital. He has been president of TiE Silicon Valley and has also been chair of TiE Global earlier. Prior to starting his fund, Venk was a senior executive in a number of Silicon Valley companies, big and small. So over to you, Venk. All the best.
Thanks, BJ. And folks, I'm here, happy to welcome our speaker of the day today, Suresh Ramamurthy. He has a very interesting background. So I think what we'll start out is by asking him to describe his journey in the US. I knew his journey from Google, you see, to Kansas to buy a bank, but apparently even before that, he had a pretty interesting life experience. So Suresh, welcome to the program. But before we start with you, just housekeeping stuff. Folks, those who are participating, please feel free to send your questions on chat or Q&A. And I'll keep an eye on them. And if I find, if they are unique, we will get you to answer those, ask those questions in your own voice. And TiE Programs, your office, will unmute you, selectively unmute those people who get called out for asking the question. So feel free to ask questions. I think the first half of the program would be just a conversation, and Suresh would be answering my questions, and then he will take on your questions. So let's get started. So Suresh, let's hear about your journeys. Tell us, what all you did after you came to US.
Venk, thank you for the opportunity, but you're making me show my age now. So, I think I'm an accidental, I ended up coming to the US, although I didn't want to come. I came in a spring semester. I ended up winning elections in the college and ended up being in the National Students Union. So I ended up launching a co-branded credit card within 2 years of being here for a National Students Union when I was at school in Rutgers. And that's probably why I missed a lot of opportunities, because my PhD thesis then was on hypertext theory, node-linked traversal engine for a hypertext database, which 4.5 years later was exactly what Sergey and Larry did. In between was Mark Anderson. So I completely missed that. I was doing something else. So I launched a narrowband, I figured out paging network could be used to send data because, at that point, paging networks were inefficient. You could send the same message in every tower, hoping that they find you because there is no ACPAC in those days. So I used it for wireless broadcasting, and that company got
the reason that you missed it was that you're not in Silicon Valley.
Yeah, that's probably why, right? So that's probably a good reason. So I ended up doing that, sold that company, or sold the technology, and I started another one, and then sold my stock in that one, and then I moved to California. I was hanging out in Half Moon Bay. Then I wasn't well, so I ended up going back to school afterwards to finish that PhD. I didn't finish. And then I finished an MBA at Chicago, and then Google recruited me. That's brought me back to Valley again. Then family took me back to Kansas. Then I ended up buying the bank. So that's kind of the story. So
And what were you doing at Google?
So Google, it was a weird situation. I was recruited without any portfolio other than I ended up looking at Google Checkout. Google Maps for mobile ended up under me. The very first application where we still had Brett Taylor, who later on went to Facebook, running Google Maps as a product manager. We had John Hankey running Keyhole, and Keyhole had just been bought, and they were trying to do the satellite maps. And these guys wanted a Qualcomm had this operating system that we needed to put it on. So that was the time we got the first one launched. So that's and Ling was sitting in Google Checkout. They wanted the checkout everywhere because we wanted to do search, discover, and all the way to monetization layer. Google wanted to see where it monetized. The idea of checkout was to understand which ads were effective in monetization.
Oh, I see.
That got a lot of pushback from the industry because they didn't want Google also taking that role, which today, unfortunately, Amazon is taking that role.
Sure. Yeah. So you moved to Kansas when?
So Kansas, my wife had already gotten a job there. I was, by the time I was at Google, I was just commuting back and forth. And then when my son wasn't well, I decided to quit Google, and I ended up in Kansas looking for a bank to buy. During the time I was looking for a bank to buy, I ended up doing some structured products and worked with guys in New York, not in the Valley actually, to do some interesting things on structured products. I learned a bit about that.
And why were you looking for a bank? How did you decide that you should buy a bank?
Like we were talking earlier with Arun, I'm a little bit of a history and also philosopher, and I was looking at the evolutionary nature of money. Money is one of the most fundamental inventions of human mind. I mean, without money, there would be no job specialization. But more than that, money allows you to store value across seasons.
Sure.
Right?
Sure.
So it allows you to buy something and store it, and also store money that you can give to your children, right? And money is evolved to accounting, where you have double entry accounting, your monetary policies come out of currency, you have gold standards. Then along the way, money has started to change. And money has had tremendous impact on the evolution of a human being in how they are able to do. Everything we do today it cannot be possible with money, and money is allowed to specialize in the most granular, what you call, way possible human beings could denominate their value. Now with the digitization, so with Google, information age was coming. It was very clear, which means whatever you need to know, you can literally type the first few words of that and it'll autocomplete and you'll have the information right away, right?
Right.
So now with you can take information and process it into knowledge. But then how do you monetize knowledge? You want to be able to monetize knowledge instantly, which means money has to evolve and drive the evolution of that. And it has to digitize itself. And that is going to happen that I felt was one way to see that journey firsthand was to be inside a bank, because I'm not a very good employee. My only real job has been with Google, right? I've never had a job outside of that other than I've been on my own. So I said, let me be inside a bank. And one way to do that was to buy a bank. That is the reason why.
I see. Okay. And how does it work? I mean, just if you have money, you can just buy a bank. Is there any other requirement? Do you have just the FDIC of the US government or anything? Is there any such requirement at all?
There's a lot of requirements, and they don't tell you what exactly it is. It's up to their reasonable judgment to decide if you're qualified to be in banking.
I see. Okay. Well, that's fascinating. Okay. So the reason you bought the bank was because it was your hypothesis that with knowledge being instantly accessible and in all the different manifestations of it, monetization of that also becomes critical, and that's why you need to be close to the money and you need to understand this thing and control it to some extent. So that's the reason.
How it's the nature of money, right? And therefore, what kind of IT system? Because and all of this underlies is hypertext theory, right? Ted Nelson came up with the concept of hypertext, and that has literally changed the world. The internet is all a hypertext platform.
Right.
Google is a hypertext engine, essentially.
Right.
So money is going to go that way. And the question is what? I didn't know. But I knew that if I went into that, it'll one of these days it'll come up.
Okay. Okay. And you never worked in a, in such a sort of regulated environment. In fact, the most regulation you had seen was, as you said, was in Google, which
Yes.
is not much at all. So was it a culture shock to see how banks operated?
No, actually, I liked the discipline. It allowed you to work in box. You have to work in a box. Being in banking is like playing cricket, like Jeff Boycott. You're, you're constantly defending even an overpitched ball.
Okay.
It's very frustrating, but it's not a Virendra Sehwag. So,
Okay. Okay. I see.
it's very structured. It has to be structured, yeah.
And so what did you discover in terms of their technology sophistication, state of the art, and all those kind of things?
I completely underestimated what I could do in a bank.
Huh.
I thought it'd be very easy to do APIs and all that stuff. I thought you just need to go in and slap some stuff together. And it was very, it's very obvious that at that time I entered banking, the plumbing was broken. There was no APIs. Payment channels were unconnected, really. There was no addressability. Like if you take telecom, you have universal addressability. You write a type of phone number, it's unique, and it'll ring and hit somewhere. Account numbers were not easily addressable. Protocols that were existing at that time, even today, ISO 8583 and all those didn't support really contextual information. There's zero support at that point for conditional payments, and compliance systems therefore were rigid and siloed. And the most important thing for me was there's absolutely no support for long tail. Silicon Valley is now all about long tail. Google is long tail. Banking, before all this, banking is an inherently long tail business because it is everything in the economy. Every monetization goes through banking, and there is no long tail support. So I had to figure out where to. There's a problem when you have so many problems is you have to figure out where to start. Right. Any solution at that point, if you remember, there was what we call PFMs, right? PFM solutions. Right?
Yeah.
They were just like painting fake windows on a wall. They made the building look pretty from outside. Did nothing to the pipes inside. Did nothing to the plumbing. Right. And I've talked about this before. It's like putting lights on a shower, right? It doesn't change the water pressure, right? Account opening at that time was still very antiquated. Account platforms are inflexible, payment channels are dysfunctional, account funding even today is 2 days, now it's going to become faster, right? And so really there's so many problems. You have to figure out, you have to go back to Aristotelian thought process and say, what is the fundamental unit of a bank? Go back to first principles. What do I solve for first? So to do that, I had to go become a compliance officer, which is really torture. I think when I took my compliance class or course final before I had to go to they ran it in some hotel or motel in Nebraska during February with a snowstorm. And I was locked in the hotel for 7 days with compliance officers of medium-sized banks. I think that was quite a bit of a torture. But I did pass the exam. But that's where I learned that the compliance had also ossified, specific to a context from way back. So that, therefore, the core banking systems are also that way. And you're never going to make them context portable. A simple example would be, I asked my core banking guy, and after some time, he banned me from calling the call center to ask questions. Basically, I said, if it's all ISO 8583, why can't, if a debit card can be authorized in the same account, why can't I authorize a gift card? Why can't I authorize a HSA card? Why can't I authorize blah, blah, blah? He didn't know the answer. The answer is because the compliance around the debit card and a prepaid card, both of which will do the same. If you swipe it for $10, they'll pull $10 from the account, but the compliance is completely different.
Oh, I see.
Because nomenclature, nothing but the nomenclature drove the compliance.
I see.
So banking is, there's nobody so-called rationalize the compliance.
I see.
So it's very tricky from that point of view.
So is that why the gaps exist between the state of the art in technology outside and in the banks?
So let's go back to fintech. Fintechs are a Virendra Sehwag, right?
Yes. Right. Okay. Yeah.
So in banking, you are operating to the least common denominator, and that is an outside stakeholder called the regulator. If the regulator doesn't understand, no matter what it is, you're going to get punished.
I see. I see.
So therefore, most banks.
So basically, the umpire doesn't want you to hit force and success.
Yeah, he can call you out.
Yeah. Okay.
He just call you out.
You can only be Jeffrey Boycott.
Boycott, he will never give out.
Okay. Okay.
So,
for those who don't understand this conversation, we are drawing upon our collective memory of cricket.
So what happens is, that's why you notice big banks. JP Morgan had way more money than any Silicon Valley startup ever, right? Even during 1995.
Right.
But they rather buy something that is more mature, that has crossed the discovery point and has reached a scale that they can explain to regulators. You notice that JP Morgan will only buy things like that.
Right.
They're very careful. If you take Goldman Sachs, right? A very smart company. And we all hear about Marcus being highly innovative. So I opened an account Marcus. I really find all they had an account opening and a place where they take my money and give me some interest and give me statement. That's it. That is Marcus. But Marcus has been touted as an innovative product.
Okay.
How did this happen? It's a savings account. Yeah, that's it. There's no debit card. When they needed a debit card, they partnered with Apple.
Oh, I see.
The Apple credit card, right? So
I see. Yeah.
So innovation is very hard within a bank.
And
I would say almost impossible.
The reason for that is that the regulators have to approve that, and they don't necessarily have the same frame of mind as you do.
The regulatory framework, for example, the FFIC guidelines, if you were to go there and search the word reasonable, you will find over 700 hits. Reasonable is not something you can program a computer with.
Okay.
You need to tell exactly what to do or not to do. Whereas the examiner, when he comes to your office in the bank, he can use his reasonable judgment, say you're out. You understand? And his reasonable judgment will differ from the next umpire.
Okay. Okay. Is it really that sort of chaotic?
It's not chaotic. It is, everybody is beaten down to the point where most banks, average banks, why do fintechs in Silicon Valley have a hard time finding banks? Most banks don't want to go near anything because next thing you know, you're out.
No, but in all the other industries, right? That there's FDA, there's all these other ones, regulators, where they're typically a little bit behind, but eventually they catch up, and then they have the relevant expertise to exercise their judgment. When to, and they sooner or later they catch up. But that doesn't seem to be the case in banking.
In the US, yes, but UK has changed a bit. Mexico is changing. India has changed a lot.
Yes.
Singapore has changed a lot. Australia is changing.
Right.
Just which regime you're looking at.
So since you are a student of philosophy, do you care to philosophize on why this is the case in US?
You're trying to get me into trouble, Mike.
Okay.
The why is simple, right? If you take the CEO of any of the regulatory bodies, their goal is to have a stable banking system that provides universal access to banking for the citizens of the country, right? Also, they use the banking system to execute monetary policy, right? As well as to provide liquidity to the citizens when they need liquidity for business or consumers.
Right.
But from that point of view, they don't want any single bank raising its hand and trying to do some interesting things because it's a headache for them to go manage that bank.
Right.
Because
right. Okay.
Them down.
Right. Okay. So you're saying that that this reasonableness is not based on the needs of where the banking industry needs to evolve, is based on the judgment of the regulator who happens to be visiting your office.
And which is a function of his or her life experience.
His or her life experience.
Yeah.
Give me an example.
You could be doing transactions in Mexico and this examiner could have a negative view of Mexico due to their own life experience.
Oh, I see. Okay.
Not and would not care to look at the GDP and the trade war flows between the two countries.
I see. I see. So his definition of reasonableness would be very different from yours.
Yes.
Got it. Okay. Okay. Got it. So when we're talking about regulator, we are talking mostly about FDIC here, right?
All the three major regulators, and states as well. So all of them, people move around the regulators anyway. So in general.
Okay. So how did you try to solve this thing? I mean, your bank, I understand, has won 4 years in a row the award of one of the most innovative banks, right?
That is history, boss.
Okay. So tell me, how did you fight this? How did you try to overcome this?
No, we were lucky. That time it was, we were innovating around the edges. So even a small step looked like a big step. Right? Not trivializing it. It was hard to do that. But there was a lot of discussions and showing things over and over again, and also keeping it within the framework of existing understanding of banking. So you have to distill it back to what you're doing today. And that's not hard to do, because end of the day, if you look at a bank account, really there are only two operations in a bank account. Either you're adding money or taking money out of a bank account, right?
Right.
And every other payment is a message that comes, and that payment message ends up with either increase or decrease in the number. So if you really distill it down to that, there's a certain way you can handle it.
So what innovation do you think you were able to bring about? And are those innovations, are they going to percolate to the rest of the banking industry?
It did, right? We were the first one to launch banking as a service in 2015. Those APIs, you name the guys today, they were all members of that labs we had. And every bank, including Citi, Cap One also joined to see how we did it. We launched the first ever most comprehensive set of APIs for banking.
Yeah.
Today, banking as a service is a rage in the valley, but we did it 5 years ago. Won awards for that, actually.
Yeah. Okay. So I think that's one of the reasons that I think if I understood you correctly, is that we had another conversation with with Dilip Venkatachari, is the CIO of US Bank, and one of the things that he was focusing on was that it's very, that thing that is very highly regulated is the back end. There's very little thing that you could do there, but there's a lot more flexibility in terms of the front end, the user interface, and all those kind of things. But the back end is the one that you cannot touch, because that has to be like the
sacrosanct. Yeah, it's sacrosanct. But if you do touch the back end, the only way you touch it is to make it even more sacrosanct.
I see.
To be even so, there is a lot of improvements in back end. Reconciliation is a headache in banking. We've improved that. We've improved the ability to, we've used the concept from cryptocurrency and improved where we can lock up the data so it cannot be impacted by internal fraud or internal theft. So those kind of things we have done. Yeah.
So let's talk about startups, and fintech. What are the areas where the fintechs are likely to be successful, and what are the areas where they are beating up against a wall?
So I look at fintechs in three different ways, three different categories. We look at fintechs that do infrastructure plays that we cannot do easily. We invested in one in the Valley and sold it to MasterCard, which is now part of MasterCard Send and Zelle. They built an infrastructure where they connected all the various debit networks and did a settlement infrastructure where you could push money through a debit trail into as a credit push. So Bill Pay is another example of infrastructure, right? So we look at fintechs and classify them as infrastructure plays. Then we look at fintechs that do vertical plays that we are not experts in, that they provide high degree of specialization in a vertical. Like we work with one that provides online lending to certain types of customers in certain places, or one that is doing certain kind of healthcare payments, right? So your specialization, you have infrastructure, then you have the third one that they call neobanks, that they think they will replace the bank, right? So these are three categories we look at.
I see. So, I mean, in terms of, is this assessment correct that that the fintechs are basically, chipping, you see, at all the really lucrative services and add-on things that banks used to do, and their success lies, you see, in taking away those juicy profit margin kind of services that banks offer.
Yes and no, right? If you take you can look at this unbundling of the bank, right? A bank is essentially long tail business, but it's been run like the way Ford ran the car. You can have any color of car as long as it's black, right? So you cannot run a long tail business with one color like Ford did for a long time, because cars are not long tail from that point of view. So the unbundling of banks is happening right now. If you take liquidity, which is lending from my side, you're seeing a whole bunch of lenders specializing in different segments of the market, offering lending. And then from lending, they're working towards account structure and providing deposit accounts and so on and so forth, right? That has tremendously impacted. What is happening to banks is, if you take let's say, a small bank in the Midwest in a small town, they're losing probably their ag business to Bank of America, because the Bank of America and Wells Fargo can provide commodities and options and trading, and for the farmer needs options and hedging. I mean, many people do not know this, but farmers are one of the biggest users of hedging.
Oh,
because they have to hedge their crops.
Yeah.
They buy options. You talk to a farmer, he will tell you the Chinese currency fluctuations impacts him, right?
Wow.
Because he's also supporting it. So some of the farmers are very smart about it, right? Some of them will have 5 to 10,000, 20,000 acres. So they're building in scale, right? So the small town bank will not be able to make an SBA loan, because you can go online and get an SBA loan cheaper than a local bank in many cases. You can't get a credit card from a small bank. You'll get a credit card from a Citi or a Amex or one of those guys. So what is a bank left with locally? It's left with a loan that other people don't want to do.
I see.
Right? That some cases okay, some cases not okay. In Main Street in the middle of nowhere, Oklahoma or Kansas, there'll be a restaurant which will be using Square. Rightfully, that point of sale and should have come from the local bank. The local bank doesn't even know what the business is anymore. So you can see all these businesses come out of the bank, right? So which finally the bank's going to be about a balance sheet. They'll be able to lend their balance sheet. That's it. They'll be essentially won't be able to offer any more services, because the barrier, the cost of adding new infrastructure and doing is so high that a small bank can't compete anymore with a fintech in Silicon Valley. So I'm planning to move to Silicon Valley Bank, just to let you know.
Okay. So, but
I think I'll send you a business plan. Let me start with a few companies there.
So what I found was, actually what I find is that I have no reason to go to a big bank now. I do my business, with a credit union, and I find that all the things that I need to do is better served, by my local credit union than by a big bank, who have very inflexible, very unfriendly customer policies, all geared towards maximizing their profit. And so I find that because of technology, a small bank can offer pretty much the same service that a big bank can.
Soon, yes. Because at the end of the day, what is a banking? As I told you, it's a debit or a credit, an increase or decrease in your number, right? And a card is an instrument through which you can purchase, and you define your credit card, what you like, by the rewards you get, right?
Right.
But it's all about what cash back and rewards you're getting today and how many miles you're getting, right?
Right.
A few guys offering that. So credit unions have another advantage. They don't pay taxes.
Yeah.
They have a bigger advantage than banks. So they can afford to spend more money in technology than an average bank of the same size.
So let's see what kind of, we talked about it. Let's talk about, some of the payment stuff. And this comes back to, the bigger question of role of banking in a society. So in India, I'm aware of this really revolutionary sort of, compared to what's going on in US, this thing called Universal Payment Interface, where I can send money to anyone I don't have to know the bank account number. I don't have to know anything. I just have to know their ID at a particular bank. So
Or even
and so.
the phone number. Even the phone number is good enough to do it.
Yeah, no, but now this thing abstracts it even further. You don't even need to know the phone number.
That's what I
Now,
meant accessibility. If you remember early on in my conversation, I said there's a lack of universal addressability in the US.
right.
India solved that. I was lucky enough to look at the UPI framework before RBI had me look at it way back, I think 6-7 years ago.
Yeah.
Accessibility is one of the key things. The telephone companies did that, and India has done it really well. And Mexico is following suit. In fact, I had connected Mr. Nilekani to the Central Bank of Mexico.
Huh.
And they have adopted some of the same things from India. They've also launched a QR code system in Mexico now.
I see. So is there, what do you think? Do you think it's possible that that kind of, that kind of convenience, if I have to send money to someone else, they charge me $25 and it takes a couple of days.
Today, but the archaic systems, they don't have a real-time risk management in the US, so they're not opening it up. They have it already. The real-time payments is already there. The Zelle is there, but they're not willing to do it for multiple reasons. This is one. The other one is liquidity. If you look at most of the big banks, they're turning their balance sheet 2-3 times. Some of them turn them once a day. Some of them turn it twice a day.
Yeah.
So they're very liquidity strapped. So for them, they don't like RTGS. They don't like real-time gross payment systems.
Huh.
PI is RTGS, pretty much, in India.
Huh.
So there are a lot of other issues in the US for that.
I see. So you're not optimistic that it will happen anytime soon, that kind of convenience could be offered to people here anytime soon?
It's above my pay grade.
Okay.
Okay. It's going to take the big boys to decide. So.
All right. Okay. So let's see. Let's see if we have some questions here. Let's see. We have. Okay, we have not heard back from these guys. They need to be ready to ask the question. So I'll keep going. So tell me about this crypto. Do you believe that that this cryptocurrencies, you see, this blockchain-based currencies have a future?
I've been very wrong with that. In 2009 or 10, my 8-9-year-old son told me to buy Bitcoin, and he wanted to have a computer for mining. I thought he was stupid. He now reminds me that I paid for his college. So I've been absolutely wrong on that. Now he's actually going to college this fall, and he keeps reminding me, if you had done it 10 years ago, this college would have been free.
Okay.
So for a rational mind, it's hard to fathom why there should be value in this, other than that it is allowed people to transact for purposes that are away from the purview of the government, right? And it turns out there is a big enough market in the billions for that. And that right. and speculators together, combine that with speculation, it has driven up the value of something, right?
Right.
And it's made it a more real value. But in reality, if you read the comments from Powell, he made a comment about cryptocurrency a month ago, I think, saying that the Fed is looking at it, and they will, if they're going to launch one, they will do it one on their own, a stable coin. The Fed said if they're going to do a stable coin, they will do it on their own, because they have to balance they have to balance between privacy and speed, right? Because if a Fed launches a stable coin, then they will know everybody who's ever touched that money.
Right.
And everybody will run to cash. Think about it, right? You'll say, I'm not using the cryptocurrency from the Fed because when I give you money, they will know.
Right.
I'd rather give you cash, right?
Right. I mean, I think I heard the other day that there was a ransomware, this thing on UC San Francisco, and they demanded payment in Bitcoin.
Which tells you how easy it is to launder money through Bitcoin.
Yeah. So, but I think what China has done with they issued a digital version of their currency. You think it makes sense, for US to do that?
Of course, China is doing it for a different reason, right? US enjoys, I don't know if they appreciate it, enjoys a global demand for its currency. So US currency is also a commodity. The US dollar is both a currency and a commodity, right? And the reason why we can spend like a banana republic, but do not experience any effects of banana republic is we spend now what 5-6 trillion during the COVID thing, and it's cost no inflation. No inflation. No other country can do this.
Right.
Otherwise, they'll become like Argentina, right? So the reason is the demand for the US currency as a commodity, as a safe haven commodity, is about 10 to 20 times the GDP of the US. In the history of the world, there's been no other country's currency that had a demand that far exceeded or a multiple of its GDP. Which means no matter how much you print, there is a demand for it. Right? Therefore, we should be using that to power our infrastructure, because we can now print any amount of money within reasonable limits and build our infrastructure. We're not doing that really, right? We can use it for positive purposes. And China is extremely jealous of that. China looked and said, look, I wish I had that. I could fund the development of 1.8 billion people. So what is China doing? It is slowly working towards that. And the crypto strategy they have is towards that. They have now jointly announced a crypto initiative with Russia, Japan, South Korea, where they'll be able to trade among each other through a stable coin that is underlying is a basket of currencies, right? So they've already started the process.
I see. So you don't think there's a threat to US from the fact that China has issued a digital version of that?
The threat, this is the beginning of the threat. And if you notice, for the very first time, China announced sanctions on the US officials.
Right.
One was my neighbor, actually, from Kansas, Mr. Brownback, right? So they have started. And the next step I expect them to do is have all the currencies in their, Belt and Roads Initiative, all the countries, they will be forced to honor those sanctions or enforce the sanctions. So China is building that. And they've already started to build bilateral agreements on trading on renminbi. So when it happens, it's going to be sudden. It's not going to, the build up towards that is gradual, but there will be a cutoff day on which even if the US currency loses demand by 10%, you're going to see massive inflation in the US. 10-20% lack of demand for the US currency is going to result in significant inflation here.
In US?
Yes. At that point, we're going to see chaos here. This country can no longer support inflation, cannot support 6% mortgage rates. Silicon Valley cannot support 6%. The home values will fall there. You cannot support, affordability will not be possible.
Okay. Well, the questions are piling up, and I took more time than I had planned to. So let's go to Q&A. Is Ajay Gupta ready to ask his question? Ajay, please go.
Yes, hi. Can you hear me all right?
Yeah.
Yeah, hi. Thank you for a great talk. Certainly very interesting careers that you have navigated. I was curious what your thoughts were about the future of banking overall with the diminishing net interest margin environment that we seem to be already being and entering ever more aggressively now. And also, if you could please talk about some of the innovations you implemented at your bank that would benefit all the listeners. Thank you.
The future of banking is unbundling is happening right now. But at the same time, what is really happening, we have to understand is we are now 25 years post emergence of the internet as we know it today. And the real economy is only now starting to interconnect all its pieces to fully digitize. Right? And every time there is a layer of digitization, you're going to see e-commerce go up, you're going to see productivity go up, and you're going to see monetization go electronic as opposed to checks. And you're seeing new startups emerge trying to do the latest trend in Silicon Valley is procure to pay companies, right? You see a whole bunch of those. So you're going to see more and more emergence of that. The big boys will continue to buy those companies and make them part of their service offering, right? And the small banks are going to keep going out of business or getting merged. So you'll see that in the next 10 years, the number of banks already down to 5,000, I think. They'll probably go down to 2,000, 3,000 banks, right? The number of banks are going to keep shrinking. right? So that's kind of what I would look at the future of banking. In terms of innovation, we launched banking as a service. We now have a programmable ledger. I don't think many banks have talked about it, but we have that. So, and we have a bunch of other things we'll announce, hopefully, but not as a bank, but as technology companies outside the bank. And Venk is familiar with some of them. So
we could have a conversation on that on the side, Ajay.
Yeah.
All right. Let's see. Is Sarosh on the call? Can Sarosh ask a question? Please unmute yourself or unmute Sarosh, please.
Unmute.
Yeah.
Okay. All right.
Sarosh,
Can you hear me now? Hello?
Yeah, you're on.
Okay, great. So I wanted to find out. So first of all, great talk. Glad to meet you, Suresh. Hi, Venk.
Hi.
So the question I have, Suresh, is, are you saying that in the future, with fintech companies peeling off all the profitable elements of banking, that in the future the banking business will mostly be the margin between the deposits gathered and the lending rate?
not necessarily. Banking will become a utility. They could be lending their balance sheets in a different way to a marketplace. Because banking has a different function beyond, because banking provides a way to safely keep your money with insurance. So nobody in this panel or nobody in this audience is ever going to put your money in a bank that is not FDIC insured. Right? If you do so, you're going to buy treasury or you're going to go to stocks. So the challenge is going to be for banks that can figure out these opportunities, and for banks that don't do that, they'll end up selling their balance sheet to somebody else.
Okay. Looks like, Paul Singh has a question, but he cannot ask for some reason, technical reasons. So I'll ask the question on his behalf. His question is, large banks spend a lot of money on analytics and tech behind it. Do small banks and credit unions do the same?
No, they buy a cheaper version of the same thing when it comes to them. It's like everything else, the Ferrari goes to the richest people, and the innovation of Ferrari trickles down after a few years to a smaller car. Right? That's what happens. It's a trickle-down economy there. So,
I see. Okay.
and the small banks are less data to analyze anyway. So
less data to analyze. That's right. They don't need those fancy things.
Yes.
I see. Okay, and Sandeep has a question. Well, let's see. Can Apurva Saxena, is he available? Can he ask the question? I guess he is. Okay. Apurva, please ask your question.
Hello, Venk, and hello, Suresh. This is a fascinating talk. A lot of the banks are investing a lot on AI, ML, or at least making a lot of noise about AI, investing in artificial intelligence. Do you see that materially changing anything? Or where do you see AI, ML making a real dent in the banking, in the financial services industry?
The overall industry, not just banking, enterprise itself is moving towards processes, right? From transactional silos to process-based transactional management. And as you go there, you'll have to make decisions along the way in the process. That's where machine learning, AI come into play. Essentially, what is the purpose of AI is to help let the computer make a decision the way the human being would have made it at that given point in a more consistent fashion, right? Being able to take in more amounts of data that a human being can't possibly do in a short period of time and do it in milliseconds, right? So therefore, it is a productivity enhancement. You will find banks using it. The question is, where will they use it? Because there is a regulatory hurdle they have to cross. For certain types of areas, they have to get quite extensive studies done before they can put it to practice in real. You cannot do it like Facebook, right? Something goes wrong on Facebook, they apologize and move on. It's a free service, right? Banking cannot do that.
Okay, let's go on to the next question. Is Roger Krakoff on the line? Can Roger ask the question?
I can. Suresh, very interesting. So my question to you is, given the COVID change wave, how do you think that will impact the industry? And in particular, I've been reading that the physical currency is now in shortage because people aren't going to stores or transacting. And I'm wondering what you think about the future of branch banking, because we're all learning not to go into branches.
The branch banking is essentially was about visiting a human being or visiting a branch with human beings that knew your name and could understand you and have a chat with you and give you a better understanding of the product. If a mobile app can do a better job of that, there you go, right? And the question is, how many banks are ready for that level of digitization? The big banks have the most branches. BFA has a lot of branches, right? But then there is also another purpose for branches, right? Branches are the eyes and ears of the government, essentially of the bank, through the bank, the eyes and ears of the government on the pulse of the local economy. Because there are local people who work in the branch who know people in the economy. So to me, I'm kind of ambivalent, right? Because if I was running a country, I would love to have the branches in every part of the country, like India would like to have State Bank of India everywhere, because they are the eyes and ears of the government on the pulse of the economy, not in terms of spying on people, but in terms of understanding the pulse of the economy, right? The mobile app is not going to be able to capture the pulse, right? On the flip side, the mobile app or Alexa or whatever it is we're going to use is going to digitize and make it easy for you from doing walking into a bank. You don't need to do certain things if you just do it with a few clicks on your thumb while you're watching TV. So I'm unsure about how this is going to play out. Banks, the fact that branches will die has been predicted for the last 15 years. It's still not happened. It's reduced the number of branches, right? But they're not fully dead yet.
But one thing these moments create is an acceleration of a change wave. And so it's often said that 10 years is now being compressed into one because of the experience of COVID. And certainly millennials are not going to go into branches once they realize how simple it is to transact to the computer and their phone. So I'm wondering two things. One, how will banks compete if branches are actually obsoleted? And then two, you're going to have a whole generation of under 40 types who are not going to go into banks any longer because they say, why should I do that?
Yes, in fact, one of the reasons people went to branches was checks, right? Deposit checks. So once what Venk alluded to earlier, if you have real-time payments, checks go away, that will kill one reason to go to a branch. The second reason people went to a branch is to get a loan. And if loans get automated, you don't need to go there as well, right? But the business loans, still many of them are made in person. There is regulations are requiring you as a bank. It's depending on the type of the loan, they're requiring you to have a local presence, go visit the business owner, visit the premises, especially if you're going to give a large line of credit to a customer. There's some requirements to go visit. And then what happens is the big banks like to have a branch because they like to have salespeople in that market that cover the businesses. Like take US Bank, they'll have a branch almost everywhere. So is BFA. So you have other considerations beyond the millennials on the business side that may also drive maybe not as many branches, but branches in highly dense business markets. That's what I think, ultimately. So, because where do you put the people who work for BFA? Not in one city. BFA has employees in every city in the country, right? They have to go someplace to work. Not now, but post-COVID.
Thank you.
All right, good. Let's see. There is one interesting question, and since she is not able to ask that question, I'll ask for her. Deepthi is asking this question, that there are certain industries that are slow adopters of technology, like financial services and healthcare, mainly due to compliance and regulatory issues, as you mentioned. So what needs to be changed to make for quicker adoption of technology in these industries? And the second part of that question is, after the bank, are you ready to buy a hospital system?
The going back to the first part of the question, right? I think hospitals have a different reason why they are not adopting technology as fast as opposed to banking. Completely different reasons. And banking already addressed the reasons. Hospitals, the healthcare system, there are stakeholders at each other's throats within the system. The doctors don't like the administrators, right? And then there is a third constituency of the the healthcare providers who are not doctors, the nurses, all those folks, right? And then you have the administrators so it's not, it's a much easier one to fix, in my view, the hospital system, because they don't have a real-time component of money being stolen and things like that. They have a more noble cause. They could be more holistic. They could adapt technologies more easily.
Yeah.
But the challenge for them is the bureaucrats who run the hospitals don't necessarily know technology or medicine. So it's a very political industry. So there are people who have bought hospitals and rolled them up and brought in different systems. There, once again, you have to separate the systems that are HIPAA required compliant and the systems that are administrative. You can optimize administrative systems. I mean, I was visiting a doctor, a friend of mine. I said, hey, I'll get you a mobile app that I can fill out all my details sitting in the room. Why would I want to fill it out, triplicate in a piece of paper?
Right.
But they don't care. They need to maintain those files. You go to the back room, there is like 2 rooms full of files.
Yeah, exactly.
Right.
Yeah.
So it's the industry is ripe for, the problem is all those doesn't add any value to them. They don't care because their money is made somewhere else on how they deal with the patients. This is just a cost center.
Yeah. So let's go to the final question from the audience. Om, is Om ready?
Sure, yeah, I'm here. Suresh, great dialogue here. I think building on what Venk mentioned, right? The value exchange, especially for the larger banks, despite all the innovations that we've talked about, hasn't really changed. And you could, looking at the Aam Aadmi, the financial wellness of the population that's living paycheck to paycheck, you could argue, looking at the stats, that it's actually gotten worse in recent years. Clearly, COVID doesn't help either. I mean, I have a vested interest because, I've dedicated the last few years on a platform that is all about financial wellness. So would love to get your take on why all the innovations hasn't really made a dent in the overall financial wellness of the types of folks that the quote-unquote fintech revolution was supposed to be about.
That's a different reason, right?
So you're talking about, as your question said, that the question is about those living from paycheck to paycheck and how come financial industry is not helping them, right?
You can't directly. I'll tell you why. Because it goes to a different problem. US is one of the few countries in the world where what I call the standstill cost of a human being is very high. I'll give you a comparative example. My mother lives in the house that my father bought 45 years ago in Bangalore. Her real estate taxes is probably 2,000 rupees or less a year. She's enough money in the bank that the interest on it, she can afford to pay her monthly expenses, right? That's not possible even in Topeka, Kansas. The standstill cost of apartment plus your car and your car insurance and your electricity and all will come to $2,000+ a month. So that far exceeds your minimum wage.
Yeah.
Cost. So we have built a society where the cost structure is quite high. It's like if you were to evaluate US as a business, our unit cost structure is too high for the human being. This is then if you add healthcare costs. So you have a unit cost structure that's higher than the unit minimum wage income. So that's why, and plus we have essentially become an 80% service economy. When I looked at the number, about 80 million people are working on hourly wages in the US, something like that when I was looking at it, the impact during the COVID time. So when you have, and that means we are what I call a haircut economy. You cut my hair, I give you $10. I cut your hair, I give you $10. Combined GDP is $20. If we want to increase the GDP, the only thing we can do is cut our hair more often or increase the price for the haircut, right? Meanwhile, we're importing the scissors from China and selling the hair back to China. They'll send you back a wig, which is now what Gandhi tried to stop in India, right? The British were importing cotton from India and exporting back shirts from Manchester.
Right.
So China's doing that to the US right now, right? So therefore, you are in a very high service economy component, right? You have a standstill cost greater than the minimum wage that will pay, right? So you're going to have you're going to have a set of 80 million people, a subset of them, maybe 50, 60 million people, who, when you pull that paycheck out on the hourly wages, they can't meet their living costs. And that is not the problem that is not a problem created by the financial services industry. It is not a problem created by the payday lenders. It's a problem created by the politicians. The way they didn't see, they still can't recognize that there's a fundamental problem in the unit cost structure in the country.
Yeah.
Because Canada doesn't have this problem. Because Canada, you have healthcare. Healthcare is not the cost of, you don't have to pay healthcare costs. If you live in Toronto or Vancouver, with public transportation, you don't need to maintain a car or car insurance, right? So if you take away those two things, your cost structure comes down to a level where you can live on minimum wages there, unless you happen to live in downtown Toronto, which is very expensive. But you can live in the suburbs and do it. We don't have that structure here.
I hadn't thought of that. Very insightful. So let me wrap it up, and let me ask you two final questions. One is there a product, is there a technology, something that if it was available, you would buy it today for your bank?
If it can read the mind of my examiner and he says reasonable and tells me exactly what he meant, I would buy that immediately.
No, seriously. Is there any technology product that you can think of?
In terms of for the bank?
Yeah.
The banking technology is not complex from technological point of view. It is complex from a regulatory point of view. So if I have a way that my regulatory requirements be easily resolved in any given area, where I can bring in innovation and still resolve regulatory requirements easily, I would buy that. But it's very hard to build something like that, especially when you put the word reasonable in it.
Okay, all right. Okay, my final question. Any tip for an entrepreneur?
Any tip for an entrepreneur to do what?
Any final tip? You see, you have been an entrepreneur all your life. Any final advice or tip for some entrepreneur listening to this program?
And, look at what you know and what is around you more often. For example, my example is I was sitting on a hypertext theory and I had built a paper on how to build a browser. Literally in 91, I had written a paper on how to build a browser. So move to a place where you have more people with whom you can exchange ideas. Like Venk said, if I was in Silicon Valley, maybe I would have, but again, Mark Andreessen did it in Illinois. So it's a question of exchanging ideas and thoughts, sharing it, right? And how does it fire off more neurons in a head? Because you could be sitting on a mother load of opportunities, but unless you exchange with human beings, somebody who can shape it, and something hits you, you're not going to know what you're sitting on at that point in life.
Right. Well, Suresh, this was a fascinating conversation. I thought we'll be discussing just the banking industry, but we discussed politics, philosophy, history, comparative advantage of societies, and all of those kind of things. So very fascinating, and thank you for your time.
Thank you, Venk. Thank you, Tai. Thank you, Arun. And thanks everybody who made time to listen to this. Thank you very much.
All right. Bye.